All right, everyone, welcome back for another episode of Carnivore Trades. Today's Thursday, October 14th, 2021. About 25 minutes or so left to go in the trading day here. As we can see, the market's up over 1.5% on the SPY, 1.75 or so on the triple Qs, and just under 1.5 on the Dow. Russell also having a nice day, but not rallying as much intraday. As we can see, had a little pop here and then it's kind of gone sideways. Up just 1.3, whereas we look at the SPY and the triple Qs, they've kind of sustained more of a rally, although stalling out a little bit here over the last couple of hours, which makes sense. If you look at the daily time frame, you can see we're right into that 50 moving average. So not surprising to see a little bit of a stall out. Plus you have this little gap fill here, so that should be decent short-term resistance right now for the market. But we really just had a nice little ABC move up so far. I think we trade as high as 444, maybe 445. I kind of calculated some target right around in that range, at least in the near term here. But in the near term, a couple things to note. Volume is really light today. And typically, that obviously that bodes upside, when you have light volume in the market. But you like to see in a choppy range, you like to see a good volume behind a move if it's going to be a breakout from the lows. And so that's just something to note. Nothing crazy, but something to note there. Also, if we look at volatility, well, actually, let's just take a look. So we made a low here on the SPY on the 20th, and then we made another lower low on the 4th there. And volatility obviously spiked on the 20th, but did not make a new high on the 4th. Typically, before markets bottom, you get a volatility spike. A volatility spike usually marks the bottom. We look at the 30th last year. That's when we had that secondary spike. We'll pull back the VIX here, and that took out the high from September 3rd. So we had a higher high there in volatility, and we had so this was your volatility spike there, and then we had a higher high spike later in the year, at the end of October. So typically, that would support the thesis that we do have another leg lower. So I don't think this market's out of the woods yet. It's a nice rally, but we also have to look at the weekly time frame. And as far as the weekly is concerned, we are still inside of this red bar. So I do believe the high of that, which would be 444 and change on the SPY, that's still going to be resistance until proven otherwise. So it's nice to see us get into that daily 50 moving average, but there are other factors. Again, monthly time frame, this is still an engulfing reversal on the monthly. And it's not uncommon for when you have a reversal to see some type of a 50% retrace or 618 retrace or something of that nature the following month. So I don't believe this market is quite out of the woods yet. And we'll just leave it at that. We just need to see a little bit more data. But, as for right now, the market's having a nice up day, and we'll leave it at that. Although coming back in a little bit now, as we get closer to 4 o'clock, you see that Russell slipping, Dow dripping down, and S&P as well. Outperforming the most today is the triple Qs, obviously, with the lower yields. That is helping out. Also, another reason why I don't want to get too excited yet is look at the yields here. I mean, yeah, this is a nice little 3-day pullback, but this is nothing crazy. I mean, you're still above all major moving averages here, and market's getting a lift off of that. But it's not like yields are crashing here. They're still trending back up. So that's just something to watch. They could probably trade down as low as 1.4 or 1423 on the TNX here. Maybe it gets down to that 1.3, 1.9 area, but I still think yields do move higher as we get towards the later part of the year. Moving on, we did have some bank earnings today. JP Morgan was yesterday. Morgan Stanley, so that had a nice move, gapped up, sold off a little bit, and now is rallying back up as we look at the intraday here. Nice little sell-off here on volume. Dip was bought ultimately, and now it's floating back up. We talked about this possibly going to $90. As long as it stays below the 50-day moving average, that's still on the table. But for right now, it had a nice little pop and a nice little recovery. Bank of America at all-time highs again, so market liking that one. Citigroup, still positive on the day, a little bit of a muted response there, and then Wells Fargo selling off. after gapping up. So Wells Fargo in a little bit of a weaker position here, and we have this trend line right here also, which you could make a case as a head and shoulders pattern. So that has got to hold up, otherwise Wells Fargo is probably going back to that 200 moving average, and maybe it'll coincide with that 4160 area there with this little pivot low. You also have some nice chart support right there, about $40.50 or so. So even if this does break, I still think Wells Fargo's got decent support there in that area. But let's see what else is doing well. IGV, so we talked about this one yesterday. IGV having a strong day, getting back above this little trend line here. And yeah, cloud software has held up really well, and that's obviously giving tech a lift. So IGV having a nice day here. I told you this could be a pop candidate yesterday based on the intraday consolidation. A nice up move and then sideways consolidation, a little bit of a pop into the close, and then IGV really pushing there today. So nice day for cloud software. Semis having a decent day as well. However, we have to hold, not get too excited yet. We're just sitting on that 100 moving average. We're sitting on that 20 moving average. So semis are still kind of in this range here, despite having a nice day. If we look at these lines that I drew in the other day, we're still kind of inside of this. So until we get a real breakout there, again, we talked about the 258.59 being a key level on the semis. Until that really definitively breaks, semis are still underperforming just a bit. So let's just move on to energy. So crude really just kind of flattish to positive today. I mean, up 1%, but it's still kind of in this range here. This little tail candle is still held up really all week long. So we'll just continue to watch that. Nat gas, getting a pop earlier, but now coming back in. I think nat gas is it's starting to struggle here. So maybe stalling out here a little bit moving forward there on natty. And then you got the XLE, XOP, really just kind of having modest up days as well. Same thing with the OIH. So a little bit of a pause here on energy. Let's take a look at the weekly on crude. Yeah, so decent follow through, but we'll see what it does tomorrow to close out the week. I still think the upside bias is probably to $85, $90 in the near term, unless we get a major reversal bar on crude oil. Precious metals also having a nice little up day as well. Gold probably gets back up. It's got some resistance up here in this. You've got these moving averages, and you got this choppy area. But if it gets through that, it can maybe go up and test 1820, 1830, and then we'll kind of reevaluate it from there. But also the lower yield obviously helping out the PM. Silver having a nice day as well, getting above that 50 MA. So nice little pop there on silver. And platinum, nice follow through. I thought this would have to do a little more consolidation, but got a nice pop there on platinum through the 100 MA. But there is a lot of chop in this area here, right where we are, about 1050 to 1115, we'll call it. Anywhere between here and that 200 moving average, there's lots of chop that needs to get taken out. But anyways, guys, I'm just going to cut it off here. Let's just take one more look. Yeah, so Spider's just coming back in just a little bit here. Don't want to make too much out of it, but it is interesting how we've had this kind of theme with these late day fades over the last couple of weeks. So that tells you that there are still sellers in this market. So just bear that in mind. But in any case, you guys take care. I will talk to you tomorrow, and I'll see you later on the chart.